The much-awaited US Fed policy pivot and a tone of finality to it has sparked a sharp rally across global equities and treasuries. The US Fed stayed put on policy rates on 13th December and laid out a projection of rate cuts of 75 basis points over 3 meetings next year, higher than the earlier September forecast of 50 BPS cuts. This will reverse a rate hiking campaign that took the Fed rate to the highest in over 22 years. With markets now expecting the first cut to come as early as the March meeting, domestic equities are set to lead emerging market inflows next year, analysts believe.
Market participants are already pricing in that the Fed will be cutting rates, or most global central banks will start cutting rates starting from March 2024. And within that, I think it goes without saying that that will provide an element of slight weakness in the US dollar, which is always a kicker to emerging markets. India has remained the bright spot this year in 2023, with the MSCI India gathering more than 50% of all inflows coming into emerging markets from foreigners. And I think India will be the shining beacon within EMs, and it will outshine developed markets in the next 12 to 14 months as well.
On a year-to-date basis, the MSCI India Index has rallied 15% this year, while the MSCI Emerging Market Index is up just 2% in comparison. In terms of equity market pockets, the robust momentum from both domestic and foreign investors is likely to lead to large caps staging a strong turnaround, analysts add.
I think in the emerging market basket, India will definitely command a large portion of the flows that will come in. For multiple reasons that we all know, be it interest rates, be it inflation, be it the stability of the government, though we are going in for the big election next year. So I think new funds coming into the domestic institutional investors and foreign institutional investors, their primary focus is going to be large cap by default. So you are going to see possibly some kind of a catch-up rally, as we call it, by the large caps compared to the mid, small and micro caps.
Notably on the bourses, large cap stocks have remained underperformers this year as against their mid-cap and small-cap peers. Top large cap gainers are Tata Motors, NTPC, L&T and Power Grid, which have surged 62 to 85% so far in 2023. Mid-cap and small-cap peers like Jai Balaji, Orient Pro Solutions, REC, PFC and SJVN have outperformed by soaring 270 to 1000% in this period. VK Vijayakumar of Geojit Financial also expect the large capital flows to India to mainly benefit large caps, particularly the fairly valued stocks in the banking pocket. IT too is likely to attract buying while there is no valuation comfort in mid and small caps, he says. Thus, the Fed pivot is expected to extend the recent strength in markets, with analysts betting on large caps given their valuation comforts and strong fundamentals. Today, on 15th December, global cues and stock-specific action will dictate trends on Dalal Street.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's making plans for an early retirement. Business Standard.